is a new 0% down mortgage program that a lot of people are excited about. There are some huge concerns with this program that many of the news outlets are simply ignoring. So today we're going to talk about it. This program may actually hurt more people than it helps. We're also going to talk about what to do if homes where you live are too expensive. So make sure you stay until the end to hear that. But first, I need you to hit that subscribe button. If you want to get better at real estate investing, you have to follow this channel. Also, be sure to go to the description of this video for a free training on how to invest out of state. First, we need to know exactly what the program details are.
One of the nation's largest lenders, United Wholesale Mortgage, has just launched a new program to help people across the country who can't afford to buy a home because they can't afford the down payment. It's called a zero-down mortgage.
The biggest roadblock to home ownership is the down payment, right? They're renting in an apartment right now or whatever, and they can afford the payment, but they can't come up with the $5,000, $10,000 or whatever it is to put down on their house.
So this guy really sat here and said that the biggest roadblock to home ownership is the down payment. That's absolutely false. I've made a ton of videos talking about the fact that the biggest issue we're having right now is the price. Home prices are up nearly 50% since 2020. And I know for many of you where you live, prices have increased even more than that. Nobody will be complaining about a down payment if the prices didn't shoot up over the last few years. And that's a fact. He's also talking about people being able to afford their rent as if it's going to be the same cost as a mortgage. For almost every one of you watching right now, renting is more affordable than buying in the city that you live in. Let me know what you think about that in the comments. And also he's talking about people may not have the $5,000 or $10,000 down that they need. I want to know where exactly it is that you only need $5,000 or $10,000 down to buy a property, because for most of you watching, that's probably not the case. Now let's dig a little bit deeper into the program information. You're going to be just as shocked as I was about this next part.
So what this program, we are basically giving 3% up to $15,000 to help with the consumer's down payment.
We're told the money given to the home buyer for the down payment will be set aside as an interest-free second mortgage that will eventually be paid back if the home is sold, refinanced, or paid off. The program has already attracted thousands of home buyers since it kicked off 2 weeks ago. It's also raising concerns among some real estate experts who worry these loans could backfire on buyers if the housing market goes south and they end up underwater, owing more on their home than it's worth.
So let's get one thing very clear. This is not free money. This is not a grant. This is a second mortgage that must be repaid when you refinance, when you sell, or after the home is paid off. One of the problems that I have with this program is that if you have a price correction in your area and the values start going down, you can be underwater. In this same scenario, if you need to sell for any reason while being underwater, you automatically lose. And in my previous videos, if you've been watching, I talked about specific areas where home values have been decreasing. By the way, if you don't have enough money for the down payment, you have no business buying a property. I've always discussed in my videos that as a potential home buyer, you need to protect yourself. Doing a program like this without having your financial house in order is a recipe for disaster, and that's not protecting yourself. Something else to pay attention to is that they cap what they'll give a home buyer at $15,000. Now, $15,000 is 3% of $500,000, which means the most that a home can cost under this program is $500,000. And for many of you watching, I guarantee that homes cost more than $500,000 where you live. Let me know what you think about that in the comments. This next clip was absolute nonsense, and I know it's going to upset you.
They're marketing it as a zero down.
But longtime Valley lender Ken Boothalier with Cross Country Mortgage doesn't think the zero-down mortgage is anything buyers should be afraid of. He says anyone worried that this kind of loan could lead to another housing crisis like we saw in 2008 needs to remember that qualifying for a loan is much different than it was 16 years ago.
So much of the problem came from programs that didn't verify income, didn't verify assets, and we had a massive surplus of inventory nationwide at the time that went sideways. Now, all the guideline conditions still around income and everything else, job history, are so strict compared to what they used to be that the 0% down really on its surface isn't a problem.
Now, it's important to mention that down payment assistance programs are not new. We've seen many different variations from lenders and government agencies. I'm told even if the housing market churns and homeowners are underwater, as long as they don't have to move and they can keep making payments, they should be okay.
Does it surprise you that a lender is telling you that there's nothing to worry about with this program? The fact of the matter is, the more people he can get through this program, the more money he's going to make. If we've gotten to a point in our country where we need to offer people second mortgages in order for them to afford to buy a home, how is there not a problem with that? Now, watch the language that he used. He said, on the surface, there's no problem with this program. What he should have said is, under the surface, there are plenty of problems, because there are. He is correct about lending standards being stricter now than they were in 2008, but that doesn't mean that you won't get qualified for a mortgage that you can't actually afford. It's up to you as a home buyer to set a limit of what you want your mortgage payment to be. And as I've been saying time and time again, it should be no more than 30% of your take-home pay, as close to 30% as you can get. In many cases, you may be approved for a mortgage that far exceeds 30% of your take-home pay. It's up to you to decide whether you want to do that or not. But when you go over 30%, when you far exceed 30%, then the mortgage becomes unaffordable. As usual, the news did not actually tell us how people can qualify for this program. So let's check that information out. As a reminder, make sure you stay until the end, because I'm going to share with you exactly what you should do if homes where you live are too expensive. Borrowers must be at or below 80% of the area median income for the address of the property they are buying and meet Home Possible guideline requirements. For very low income borrowers whose qualifying income is at or below 50% of the area median income, they will receive a $2,500 credit as part of the 3% assistance. This credit does not need to be repaid by the borrower and lowers their debt obligation from the second lien. A 620 plus FICO and loan to value must be greater or equal to 95% LTV and up to 97%. Or at least one borrower must be a first-time home buyer and meet Home One and UWM's guideline requirements. First-time home buyer is defined as someone who has not had an ownership interest in a home in the last 3 years, 700 FICO, and the loan to value must be greater than 95% up to 97%. The fact is, if homes were actually affordable for most people in this country, something like this would not be necessary. I personally find it hard to believe that a program like this is going to help very many people. You let me know if you think I'm wrong about that. It seems to me that they're desperately trying to do everything they can, including giving people a second mortgage, to get them into a property and to start getting some loans coming through. At the end of the day, I think that's what it's all about. Now let's talk about whether or not you should do this program. Ultimately, it's your choice whether or not you want to pursue a program like this or not. As with any sort of program, any sort of loan, don't let anyone pressure you. Don't let your lender pressure you. Don't let your real estate agent pressure you. Don't let your mom, your dad, your brother, your sister, your auntie, your uncle, your wife pressure you to buy a house if it's not the right time and if the numbers don't make sense. Make sure that you clearly understand what you're signing up for, whether it's this or whether it's something else. You need to make sure you're confident in the terms that you're agreeing to. Before you buy a property, as I always say, make sure you have 3 to 6 months of your living expenses. And this applies whether you're buying a home to live in, whether you're buying a local investment property, whether you're buying an out-of-state investment property, or any sort of investment. If you don't have an emergency savings fund for yourself, your household, then you're going to be in survival mode. And what that means, in part, is that you probably won't be the wisest person when it comes to managing your investments. You're probably going to end up being one of those people who dips into their investments, dips into the rental income cash flow when you should be allowing your reserves to build. That's why I emphasize getting your personal financial house in order before you start buying properties. Now we need to talk about what to do if investment properties are too expensive where you live. As I've said before, for many of you, homes where you live are simply too expensive. And even if you didn't have to pay a down payment, you probably still wouldn't be able to afford that mortgage. If this sounds like you, I strongly encourage you to consider investing out of state. Believe it or not, there are plenty of cities and plenty of neighborhoods with homes for $100,000 or less in good areas that'll cash flow very well. The media is so focused on talking about how expensive homes are and how unaffordable it is for people, but they offer very few solutions, or they talk about a program like this, which is not going to help very many people. I'm here to provide a solution. Investing out of state changed my life, and it's literally the only reason I've been able to invest in anything, because where I'm at in California, it's simply too expensive. I mean, homes are $1 million and they're not even fixed up. So you can imagine how much I would need to invest in a property that costs that much. If where you live is too expensive, click the link in the description of this video. I have a free training that you can watch that'll break down what it takes to invest out of state. Now that you know why this program isn't good for most people, I want you to learn about 3 ways to buy properties for 0% down that are better than this. Check out this video right here.